We're a nonprofit organization dedicated to eradicating human slavery, human trafficking, child exploitation, and child sexual abuse material through disrupting networks and applying data technology and advanced analytics and intelligence.
All right. Good afternoon, everybody. Thank you for joining us today. This is the panel on Crypto-Kiosk / Bitcoin ATM's perspective. Today, we're joined by Rich Sanders, Seth Sattler, and Paul Marrinan. My name is Elias, and I'm excited to moderate the panel for you today. So I would like to go around and just start with quick introductions. I'm happy to start. My name is Elias Kokaly. I'm a deployment strategist at TRM. TRM is a cryptocurrency risk and monitoring platform that's used by law enforcement, crypto businesses, and financial institutions. Let's start with Rich. Rich, would you like to do a quick introduction?
Hi, I'm Rich Sanders. I'm lead investigator with CipherBlade. CipherBlade is a blockchain analysis and investigations company. We're most well known for our scam and hack investigations. We work closely with government, particularly law enforcement, on cryptocurrency cases. We also provide services such as compliance advisory to cryptocurrency exchanges, ATM operators, etc.
Fantastic. Seth?
Yeah, first off, appreciate ATI having me. I'm Seth Sattler. I'm the Chief Compliance Officer at DigitalMint. We are primarily a cryptocurrency kiosk provider with about 1,000 ATMs and tellers around the country. But on top of that, we also assist periodically with providing liquidity for ransomware settlements and helping victims through those types of situations.
Thanks, Seth. Paul?
Same as Seth, I'd like to thank ATII for having me in the panel. And my name is Paul Marrinan. I'm working with blockchain intelligence at TRM Labs, same as Elias. I'm former law enforcement, but at TRM, I'm mainly focused on the cash to crypto industry, mainly around cryptocurrency ATMs and layering the on-chain data with real-world data, so it's more useful to our clients.
Awesome. Thanks, Paul. So how we're going to structure this panel, we're going to be doing a lot of Q&As, and we're going to start at the macro level, describing what crypto ATMs are, how they operate, and what their obligations are, and then go further into red flags and typologies associated with illicit activities or transactions, and then talk and discuss the law enforcement and banking relationships that between with crypto ATMs and banking partners and law enforcement. So, Seth, let's start with you. Could you spend a few minutes just describing, what a crypto ATM is, and how do they work and operate, and specifically on the back end from like the blockchain perspective? What are they using on the back end, how they operate, and what is a crypto ATM?
Yeah, it's a funny question because a few years ago it was a novelty answer of crypto ATMs, or just those things you periodically see on the news, and now you go on Coin ATM Radar and it's those things that are on every street corner, every gas station, basically everywhere you turn. I think as of right now there's about 37,000 ATMs just in the US. And on top of that, there's other locations that operate in similar capacity but don't really fit the definition. So in the most basic, a crypto ATM is a retail solution for cryptocurrency. It's a place where you can convert fiat currency that's in your wallet into crypto. Primarily, it started as just small denomination dollar bills into Bitcoin. And clearly, as crypto gained exposure and popularity, it really increased. And now there's locations where you can do debit card to a myriad of different currencies, or you can some offer OTC desks behind the scenes, so you can do wires to crypto. But in their most simplest form, it's just a non-custodial way to convert fiat currency into crypto. And by non-custodial, obviously, one of those terms that gets thrown around a lot. What it means is mostly, and I think to the best of my knowledge, none of these companies add custody of a customer's crypto, which means when you buy it, it's in your wallet, whatever wallet you choose. The ATM provider is not going to hold on to that for you. They're not going to freeze your wallet. They're not going to have access to it. it is solely in the custody of the person who purchased the crypto and who presented the wallet where the funds are sent. And on top of that, and I'll pass it over to Rich in a second, but one of those things that I always hear is it's the Wild West industry. Some capacities that's true. There are a lot of operators that just got off the ground very quickly, but we're still registered MSBs. We still have to abide by all of FinCEN's regulations. States right now are taking a very watchful eye on how Bitcoin ATMs operate, which means we have to abide by not only the federal regulation, but also all of the state regulations that get passed down. So we have AML obligations, we have EDD and CDD obligations, we have KYC, we have fraud prevention. All of these things have to be built into our programs, which I think is just one of those preconceived notions that's worth bringing up. But Rich has some experience onboarding with ATM, so I'll pass it over to him so he can give more insight into it.
So quickly before we go to Rich, so there was a lot of insight there. So that was fantastic. So let me double down on a couple of things that you mentioned. So in the beginning, you said that there are some entities that operate similarly to a crypto ATM, but they don't necessarily fall under that. Could you please explain like what type of business services those are and what do they actually do?
Yeah, so when you think of Crypto-Kiosk or BTM or Bitcoin ATM, and I love how there's 50 different ways to mention the same type of product, you typically think of that almost just screen computer inside of a box that you see in a gas station, and primarily that's like what the definition of a crypto ATM is. But there's other business models. So DigitalMint offers a business model where you walk up to a teller, and the teller behind the counter does the same transaction flow, takes the cash, converts it to crypto using a tablet, but you're not interacting with a machine. There's also integrations with actual retailers. So I believe CVS, Rite Aid, I'm sure I'm going to miss a bunch of them, but they have integrations that allow you at CVS to purchase crypto. Coinstar has integrations with Coinstar machines that allow you to purchase crypto through, I believe, CoinMe, at a Coinstar machine. So it's not just, it's kind of diverged a bit from your typical just box with a computer screen on it at a gas station. And really there's a bunch of business products, or I guess business models out there that offer the same type of product.
Just to jump on top of that, Elias, what these other services are commonly referred to in Europe is voucher services, where you're purchasing a voucher that gives you access to cryptocurrency either via an app or on a website. Internationally, there's over 300,000 different locations across the globe for these particular services. But as Seth kind of alluded to earlier, there's only about 37,000 actual ATM kiosks out there. So those voucher services are a lot more prevalent because there's more CVS and Walmart and Walgreens locations across the globe than there are physical kiosk locations. What's interesting as well is how, as Seth kind of alluded to, how popular these have come up in the last year or so. Like in the last 2 years, the market has grown by 8x, and it's gotten to the point, and this is actually something myself and Seth talked about recently, how there's more ATMs in the country in the US than there are Starbucks. That's how popular these devices have become. But I'll pass it over to Rich Share to talk about his experience.
I think that's a great way to segue off and actually build back into a couple of points that Seth had mentioned earlier. There were two core points there. One is that these are non-custodial solutions, meaning that if a Bitcoin ATM customer buys Bitcoin, they designate a wallet address that Bitcoin is sent to. That Bitcoin ATM operator isn't holding on to the funds. Cryptocurrency transactions are irreversible. So if somebody receives, let's say, a QR code or a Bitcoin address from somebody that they haven't yet met, they can't reverse that transaction. It's done. And the other kind of 50% of that equation comes down into what is the appropriate risk-based approach? What is an effective compliance program? And a lot of that is going to come down to what are your customer demographics, right? Understanding that, for example, somebody that's an elderly woman that has minimal or in most cases no cryptocurrency exposure in their past, that suddenly onboards for one of these Bitcoin ATM operators and is putting in tens, or I've even seen hundreds of thousands of dollars within the course of a month. A lot of this comes down to common sense compliance that actually predates cryptocurrency. But specific to cryptocurrency, and I'm sure we'll talk more about this on the panel, there are tools out there that are designed to provide some insight, basically, into where the cryptocurrency is coming from or where it goes. And it's through the utilization of these tools, the combination of the on-chain data, plus just really plain old-fashioned common sense for the stuff that doesn't involve cryptocurrency. That's how you have a risk-based approach, and that's how you prevent grandma from losing their life savings. Unfortunately, when you have a 300% increase per year in Bitcoin ATMs taking place, I can tell you with extreme confidence, in fact, I would go as far as to bet my entire professional credibility on it, that if you were to sit outside one of these ATMs and just sit there for a week and see who uses them, you'll see the type of demographics I'm talking about.
That's really interesting. Richard, you mentioned that risk-based approach, and that basically all these crypto ATMs are money service businesses, so they need to build that within their compliance framework. Can you elaborate a bit more on that, and like what does that risk-based approach look like? What other solutions that you have in place? I know we're going to talk a little more about it later down the road on like blockchain intelligence solutions that are available, but if you could elaborate a bit more on that.
Well, a core part of the risk-based approach is going to be transaction analysis. If a company isn't doing transaction analysis, they can't tell you where the Bitcoin is coming from or went to. And if they can't tell you that, common sense would dictate they can't fulfill their regulatory requirements. After all, as it was discussed, these are MSPs, and that is part of an anti-money laundering program. And while the law doesn't say specifically you have to have TRM or you have to have chain analysis, it is very commonly understood and accepted at this point, not just that you have to have one of those tools, but you have to be proficient in using it or have staff that's proficient in using it. Having one of these tools, I've seen unfortunately some companies do this, where they procure one of these tools because it is now an expectation. It's not 2018 where they could pretend, oh, that's just something bigger companies do. These are widely accessible tools, even the smaller ATM operators. But just having one of these tools does not make you compliant. It does not enhance your risk-based approach. It's no different than being in a garage and expecting to become a car.
That's exactly right. And Seth, you can speak a little bit more on that, but you're a money service business. You're obligated to build that compliance framework. You're also filing SARs, right? Like you're obligated to file those SARs and fill them out and, report to FinCEN. So I think, it's very important for folks on this call to understand that you are doing, very similar things to a traditional money service business in the sense of the compliance obligation. But now you also have that insight of the blockchain activity that's happening and utilizing the tools that are available to get that type of insight into what's happening from like the blockchain perspective.
Yeah, absolutely. And it was fun coming from the banking world into the crypto world, because when you start that kind of transition, you expect the transition to go, I'm going from banking where everything is so laid out and transparent, and I have all these great investigations, to crypto where it's the Wild West, and how am I supposed to be doing AML, and how am I supposed to be catching the criminal and nefarious activity I'm supposed to be catching? And then you come over to crypto, especially in 2022, and with tools like TRM and Chainalysis and Elliptic and all these tools, on top of all of the known guidance and red flag guides that are out there, it's probably almost more efficient to do AML and fraud protection in a crypto ecosystem than it is at the bank. Because if I take cash out of an ATM, my bank isn't going to know where that cash went. They're not going to know what I used it for. They might reach out to me. I might lie. I might tell the truth. On the crypto side, if someone comes to an ATM and says, I am sending to a wallet that I control, I can guarantee there is nothing nefarious here, I can turn around and use TRM and say, I am pretty confident that's not the case. I'm actually 100% confident you sent it to a dark marketplace. In fact, the last 10 transactions that you've attempted have tried to go to a dark marketplace. And that's the type of transparency you don't get at a financial institution, or a traditional financial institution. So it just it breaks that narrative that compliance is so much harder in crypto and it's so much riskier. Because honestly, you can build more creative solutions because you have more insights into what's going on.
And just on that point, the risk associated with the cash to crypto industry is, non-ironically, the cash side of the industry, not the crypto side. Once it actually gets into a kiosk or into a service, we can build compliance tools to actually identify that activity online. And the ledger, in the majority of these circumstances, are public ledgers, where we can actually layer our intelligence on top of it and provide useful risk-based data that different financial institutions, not just in the crypto industry, but in traditional financial industry, and regulators and law enforcement can utilize to make the ecosystem a lot safer. But the origin of that cash is something we can't stand over. Like there's no bank that can say, well, these bills came from this particular ATM and this is the path of the transactions that got it to the cryptocurrency ATM. But once it actually enters a kiosk, it can be traced. And that's one of the beauties of the cryptocurrency industry from a compliance perspective, as Seth alludes to.
Yeah, it's funny you mentioned that. We built our human trafficking detection scenario and our exploitation detection scenario, and then the red flag and typology guide built on top of that. And just off the top of my head, I think only 1 or 2 of those data points are actually on the blockchain side. Most of our detection, most of our red flags, most of what we're doing in the investigations on the fiat and qualitative investigation side. And yeah, probably 1 or 2. I know 1 for sure. There might be a second one are on the blockchain side.
It's really interesting. Before we move on to the next topic, Seth, I wanted to have you double down on the requirements from the licensing perspective. So you said you're an MSP. You actually have to be licensed by every state that you're trying to operate in. So if you can just speak to that a little bit on that process and the difficulties can be trying to be licensed by many different jurisdictions. So yeah, if you could provide a little bit more color on that.
Yeah, in some capacities that's accurate. In some, it's kind of up in the air. So we for sure have to be licensed in a number of states. A number of states that come out and said any cryptocurrency related transaction, you have to get a license. It typically falls either under their money transmission license or exists kind of outside that domain and just they create their own. Looking at you, New York, and other states of similar variety. But basically what they did is said, if you do crypto, you need to be licensed. We need to know where your machines are. And that's kind of it. There's other states that have taken a more hands-off approach that say either you just need to be a registered company and let us know that you're operating in our state, or some that just basically hands-off, just come on, come all, welcome to our state, you can do business here. So there's a wide variety of licensing requirements in the states. The weird part is they change pretty frequently. We've had one state 1 year tell us you absolutely do not need to be licensed, and then within a year we were getting a licensing letter. So it changes very quickly. What I will say is I believe the GAO put out a report in November, somewhere around that time frame, basically trying to solve this issue of ATMs are popping up left and right, and no one's quite sure where they are at any given moment. So they basically came out and said there needs to be some registering process where you say, I have 1,000 ATMs, here they are, this is what they do, here's the KYC requirements for them. And that way there's at least some, information on where all the ATMs are and kind of how they operate.
Yeah. And it's really interesting.
It could be a real coin flip because sometimes they could end up in motels or other questionable areas.
Yeah. No, it is. Paul, after you.
One of the things that actually on the GAO report is that the analysis showed that they expected that less than half of the actual ATM companies that are operating in the US are actually licensed or registering with, or are fulfilling their registration requirements with the likes of FinCEN and the different states. But at the same time, there's still a significant number of entities that are known to be operating across the country, thanks to the likes of Coin ATM Radar. There's an estimate of almost 600 different ATM companies globally that are operating, and that's just the ones that we know about. So,
yeah, it's probably once a week. Either law enforcement or someone in the industry will reach out to me and say, have you heard of this company? And I put it at about 50-50 that I have. And that just shows how quickly they're showing up and how quickly they're growing. Because oftentimes it's a company I've never heard of, having been in this industry for 4 and going on 5 years, and they already have 200-300 machines. Yeah, the industry is going really, really fast in one direction. It's just growing as quickly as it can. But yeah, like Rich kind of alluded to, there is important parts of knowing where all these machines are, especially in the topic of discussion today, where we're talking how do we stop human trafficking, how do we prevent utilization of these machines. Location placement is huge. We've done a little bit of industry research just on the side while building out our typology for crypto ATMs and exploitation, and there's obviously troubling patterns that you'll come across. So you'll see ATMs pop up in towns of like 2,000-3,000 people on the southern border, and there's like 10 ATMs in that town, all strategically placed around border entries or along truck stops. So we've seen a few show up just on basically abandoned or desolate highways inside of a truck stop, inside motels or pay by the hour hotels or places like that where I think one example was actually at a motel at a truck stop, which again, it's kind of on the ATM provider when these locations reach out and say, I would like an ATM in my motel. Okay, well, why? What's the demographic that's going to be using it? What's the use case? What's the economic purpose? And then if you take your risk-based approach, because I will never design a risk-based approach for anyone else, but if you decide at the end of the day, all right, I'm going to put a machine there, at least build in the scrutiny and the controls necessary to detect what might occur at that location. So if you're sticking it in one of these places, make sure you have the detection method in place for what could potentially happen by having an ATM in a motel.
And just to jump in on that real quick, I was going to mention risk-based approach. You beat me to the punch. That's what this all comes down to. And there comes a time where on the blockchain industry side of things, we have to check ourselves and we have to be honest. There has been a 300% increase per year in the quantity of these ATMs. Has there been a 300% increase in the adoption of cryptocurrency? I don't think that's true. And I could say that as somebody in the industry. It comes down to these common sense things, risk-based approach. You are putting a machine here. This is a high risk location for that machine. How are you going to hedge that risk? That decision might be, I don't place a machine there. That decision might be, I place the machine there, but I perform additional diligence on the transactions that take place on it. There are ways to make something like that possible if there's a legitimate business reason for it, but that all comes down to risk-based approach. And the important thing with all this is you have to bear in mind, well, if it's not legitimate adoption of cryptocurrency, then why is there an increasing amount of these Bitcoin ATMs going around? And unfortunately, the answer on that is fraud. The overwhelming majority of outbound transactions from, unfortunately, a lot of these Bitcoin ATM operators are quickly traced to exchanges in Africa and predominantly in Nigeria. And there was actually a study that CipherTrace did on this a couple of years ago. When that constitutes the majority of the volume for, unfortunately, a lot of these participants in the Bitcoin ATM space, it also makes compliance almost a non-incentive. So it's very disheartening for the folks that are trying to do the right thing.
Yeah. Rich, I will come back to you, and I would love for you to go further into discussing the different red flags and typologies associated with illicit transactions. But Seth, to your points that you were discussing, are there like a typical or ideal customer that ATMs, crypto ATMs have? So you said something that was really interesting in a sense of, like sometimes it's just common sense. If somebody reaches out to you and says, hey, I want a crypto ATM in a motel, looking into that area, looking at that typical user. But do you, like, when you're making those decisions, do you have like a criteria or things that you think about to make that decision? Are there like jurisdictions or specific scenarios where it's like that's like you check in the box, that's a no, and there's areas where you're fully comfortable putting an ATM there? So like, how does that decision making process? I know like it's a risk-based approach from a compliance perspective, but even on the deciding on locations and things like that, like what does that criteria look like?
Yeah, I mean, there's always going to be, we'll say, tug of war between business development and compliance. Like that's just an aspect of this industry or any financial industry that's been around for ages. But DigitalMint, and again, I can only speak to what happens in my four walls. So how DigitalMint operates, we reject locations all the time, whether it's doing a background check on the location owner and seeing that they have a history that we're not comfortable with, or this is their fifth business in 3 years. Figuring out, all right, well, we have a location right next door. So why would we put one that close, harming our own kind of business opportunity at one location by just splitting the revenue between two? Because you're not going to get multiple customers going 5 feet down the road. But then, yeah, there's certain businesses that we won't put a location in, or really like anyone that could, like any location that could be easily accessible by a certain business type. So dispensaries are probably the big one that is kind of topical, because that is kind of the tides around that are shifting slightly in the US. But yeah, so we won't put one in a dispensary or in the lobby where a dispensary is present, things like that. Same with hotels. We won't put one in a hotel or right outside of a hotel, massage parlor, things like locations that just increase the risk of that. But as far as like what a good location looks like, it can be anything, because crypto has so many different use cases. So back when mining fees and kind of transaction fees were so low, putting them in a place that does remittance and counting it as a secondary remittance option, even though they had to send to their own wallet first, was perfectly fine. We did have individuals that were saving part of their paycheck and then sending it overseas to a loved one, and were able to provide the receipts showing what the loved one was using it for. We're able to provide the documentation on where the source of funds came from. With investment opportunities, putting it in locations that offer similar products. So whether it's gold and gold shops, where instead of investing in gold and those types of materials, people are investing in crypto. So like there's obviously locations where customers are coming in and using crypto for the exact use case you'd hope for. And I think by having crypto ATMs available and readily accessible, it makes it easy for them to do so.
Fantastic. And please tell me if this is a business question, and you can tell me no. But from like an ideal customer, do you think like crypto ATMs are typically used by users that are trying to send money through like remittance, like send remittance payments? Is that like the typical ideal scenario for a crypto ATM user?
We see remittance periodically. A lot of times it's someone that works in a cash industry, so whether it's a waitress or someone in the service industry that says cash or something along those lines, that's just using it as an alternative savings account or alternative investment vehicle. Those are typically the customers we'll see. We also see we'll call them experienced investors that will just use it as a very quick way to get access to crypto so that they can start playing the market with all these coins that aren't readily accessible on major exchanges. So, I mean, there's a myriad of different use cases. The ideal customer is not like a clear image of like, this is the only person that should use an ATM.
Got it. It's really helpful. Richard, do you mind going through some of the different red flags and typologies associated with illicit transactions that are going through crypto ATMs?
Well, the great thing about a company like TRM, for example, is that TRM, or those that have access to it, are able to look at, for example, if they're a client and utilizing TRM as a solution, or really for that matter, anybody can utilize a tool like TRM to pull up one of these companies and see at a high level, where is the cryptocurrency coming from or going to? So I would say the easiest way to answer that question for any of these companies that have a compliance program, which they have to, which also have a compliance tool, which in order to be compliant, they have to, would be simply to look in their compliance tool. That's going to give you that insight of where are your customers sending funds. And then at the highest level from there, if you see that, hey, we have a whole bunch of money going to these specifically Nigerian exchanges, and you're a US-based ATM operator, that's probably your top priority to fix, right? That just stands to reason. If it is the largest by volume, then that's going to be the one that you want to address. The great thing about the blockchain analysis portion of this is that while it is certainly true that you can supplement actions for your compliance program, actions to bring that risk-based approach more appropriate with the off-chain stuff. You could rely on cameras, you could rely on demographics. The blockchain data gives you so much of what you need because you could identify, okay, fraud is the biggest thing. We have an issue with carding. There are going to be some noticeable deviations from this, and this is what I've noticed at least state to state in the US. There's certain regions, for example, where I'm around, Pittsburgh, or the Pennsylvania, Ohio area, where narcotics might be more prevalent. You're going to have more exposure to that, and that gives you more of an idea of what you need to address. And this is true whether it's for like a mom and pop shop operator that only has a few local ATMs, or for a national level Bitcoin ATM operator, because they have to focus in within their compliance program their risk-based approach for machines in Pittsburgh, the city I'm in, should be different for machines that are in the middle of nowhere at a gas station in Alabama. You are going to have different exposures there as well.
Yeah, so yeah, let's double down on that a little bit more, because we've been saying the risk-based approach a lot on this panel, but you give a great example, which is like based on the city and based on how much information we know about the city, what kind of activity is associated there, right? How you handle those accounts and those customers and what kind of due diligence you do could differ, right? And so if you could just explain a bit more on like that process. So for folks on the line listening in, understanding that when we say a risk-based approach based on, you know, who your customer is, where they're located, you know, what type of activity they're doing through your platform, that requires maybe a different enhanced level of due diligence. So maybe just expand on that a bit more.
So the enhanced due diligence portion of this is a great question, because that should be taking place at least at 2 different occasions, or at least on the one occasion of onboarding for particularly high-risk demographics. And that comes into the whole common sense thing I was talking about earlier. We can all pretend that the 70-year-old woman that's never heard of Bitcoin before and swears that she is sending it to a deployed soldier thinks that she's actually sending it to a deployed soldier. But anyone that's been working within a Bitcoin ATM company for more than a few months knows exactly what I'm talking about. And for the audience, if you don't know what I'm talking about, the most common scams with Bitcoin ATMs are investment scams and romance scams, and sometimes both. And oftentimes it will take the form of, I'm a soldier that's deployed, yeah, I got hurt, send me money for my medical bills, or I have this investment opportunity. But again, these are all very, very simple things to identify. And a lot of it is highly preventable because they specifically target the most vulnerable populations. That's step 1 that I would say to answer your question. Use common sense in who you're onboarding. These Bitcoin ATM operators, as I'm sure Seth will talk about extensively, they don't require enough KYC. They do permit some transactions that are below a certain threshold, but generally speaking, when you're looking at the scam victims, a lot of them are KYCing because they don't have a reason in their head to avoid KYC. So real common sense stuff that you don't even need to look at the blockchain data. Look at the 70-year-old person that put $70,000 through your machine in the past 2 weeks.
Exactly.
The other part of that is
just double down on that. So like for an example, internally, that's a solution where, you know, if anybody's over a certain age, you can flag that when they attempt to make an account, and then that would have to go through a further enhanced due diligence process where a member of the investigations team will have to review that account and understand further who the person behind that account is trying to create it. So you can create a rule where if somebody's over a certain age, that will cause an alert on the back end for further review. Would that be accurate?
Precisely. And then here's the other 50% of the equation. You have somebody that utilizes a tool, let's say TRM, as part of their compliance program. They might get an alert that says, hey, this customer that you have onboarded is sending a transaction to this wallet address. This wallet address, it's sort of like Seth was mentioning earlier, might be known within that system as, you know, a particular scam. And at that point, what these systems can do is they can prevent that Bitcoin from being sent. And that's why these tools are so important as part of the compliance program, because this is the only way that we can really effectively keep people safe. It can prevent the transfer to that address. And then at that point, what the company can do is their enhanced due diligence. They can reach out to the customer. They could say, hey, are you sending funds to so-and-so or to this wallet, or where are you sending funds? And this gets a little bit more nuanced because it depends upon the typology. Let's stick with the example of fraud. This is a huge challenge for the Bitcoin ATM operators, which is a little different than cryptocurrency exchanges. If they're doing enhanced due diligence, it might be because, let's say, of mixer use or something. These are people that are highly vulnerable, and they've been susceptible to fraud for, sometimes months or even years. So it's very hard to talk these people down.
For sure. And with that, we'll go to Paul, and then we'll have him speak a bit more about blockchain intelligence tools and how crypto ATMs could utilize them within their compliance frameworks and what they could do to exactly screen transactions.
Yeah, as Rich rightly identifies, like wallet screening and transaction monitoring are 2 important services that we actually provide at TRM, and that allows these compliance teams to not only screen the actual individual, but to monitor the activity that's going on in real time. So that if a suspicious transaction hits against one of their wallets, they can actually do their due diligence on the actual transaction and the individuals involved and decide whether or not a SAR has to be filed or what's the next best action to make sure that their customers are safe and that their company is remaining compliant. One of the other things that Rich touched upon, and it's probably one of the things that I'm most supportive of, is using or buying the tool and using the tool are not the same thing. It's very important that if you actually get access to a tool like TRM, that you actually undergo the training that we provide as well, and like the certification that we're building alongside the actual tooling that we're building is essential to reducing barriers to entry and people understanding that being a financial crime compliance professional is the same in cryptocurrency as it is in the traditional financial system. There's a great quote from Nick Furneaux, who's kind of prevalent in the ecosystem, that there's no such thing as crypto crime. And that's basically because it's all financial crime. Anything that's linked to cryptocurrency is just another form of financial crime. And it's important that companies like ours and like panels like this do our best to kind of lower that barrier to entry to people that just hear cryptocurrency and switch off and don't realize that it's actually as easy, if not easier, than traditional financial crime investigation.
That's right. And Paul, I'm going to push back on that and have you like explain a bit more of like what does a blockchain intelligence company, like what kind of insights are we providing? So yes, you can monitor transactions, but what kind of intelligence are we providing the end users to give them the insight they need to monitor financial crime activity?
Yeah, and that's a good point actually. One of the things that kind of turns people off in relation to cryptocurrency is that we refer to the open ledger and the transactions being on-chain, and then people start to try and read articles on it and they just haze over because of all the technical data and the metadata and all of this. What blockchain intelligence tries to do is we try and layer real-world operational data that makes sense in the real world. Say the name of a company, or like the kind of KYC level of the different companies that we engage with. Stuff that can actually be tied to an entity that can be identified on-chain. And then we layer that, we enrich that on-chain blockchain data with useful intelligence that our customers can use in their everyday business, without necessarily having to know much about the actual technical data of the underlying blockchain that they're using. And that's, again, as I mentioned, reducing the barrier to entry. Like, you don't need to know all about nonces and like all of these different kind of technical items that are associated with blocks and Merkle trees and everything like that. But you can still use a tool like ours to do fairly robust or very robust compliance activities, like applying your risk-based approach across a multitude of different on-chain services and users.
Fantastic. To be conscious of time and just to do a time check, we have a little bit less than 7 minutes left. So with that, I have 2 more points that I would like to focus on, which is banking relationships and law enforcement relationships. So we can start with Seth, and if you could just talk about the difficulties of obtaining bank accounts and for crypto ATMs and what that process looks like, and what can be done in the industry as a whole, right? And to improve those relationships and to build that trust with the banks.
Yeah, great question. I'm glad it's not like a fresh wound anymore, because obviously for a while, Bitcoin ATMs and banks and Bitcoin ATMs and law enforcement, it wasn't an animosity, but it was definitely just a contentious relationship all around. So I'm glad that's no longer the case. Thing with banks is, as the states and the federal side and the international side figure out what our industry is, the banks are kind of the regulators that we have to abide by. They're the ones that set the rules. If we can't get a bank account or a liquidity provider for crypto, we can't operate, which means we need to match the risk tolerance of the banks, of the liquidity providers. We can't exceed their risk because then we can't be a business. I I would say on the bank side, one of the important things is actually knowing who your crypto ATMs are on your portfolio. I've heard, I guess, war stories of Bitcoin ATMs kind of saying that there's an ATM service or a software provider and sneaking in, which obviously doesn't have the level of scrutiny and due diligence that the bank would want on that company. The other thing is there are companies out there that act as middlemen for certain crypto companies and the banks, and almost vouch for their programs and say, like, this is how great the program is, we wrote it, trust us. And that's a dangerous game to play because, as Rich has said, things on paper and having tools in place and having 50 people on staff doesn't necessarily mean you're doing the level of due diligence or you have a program in place that can detect human trafficking and detect fraud. So just make sure that you, one, know who the ATMs on your portfolio are, and then two, are just actually validating that the program they have in place is in place, because that's monumental in putting a dent in any typology that we're talking about. And
I'll build off of that really quick. Sorry to interrupt, Seth, but you bring up such a good point, and I want to support you on this so strongly. With the point of having a tool or having staff, again, I cannot emphasize enough, does not confirm that an organization has an effective compliance program. And unfortunately, a reality of the blockchain industry is that there are more than a handful of companies that they will get one of these tools. They will aggressively hire compliance staff. But here's the beauty of the blockchain. It's a public ledger. And the fact that tools like TRM exist enables anybody with access to them to just go in. And this is turnkey stuff. This is, like Paul was talking about earlier, it doesn't require you to know these advanced things about blocks and change addresses and all these technical terms. This is really turnkey. You could plug in one of these companies into one of these tools, and you could get an idea of where did the funds go. And yeah, that's going to be your answer, not they have this tool or they have 50 stuff.
Yeah, I mean, shameless plug for my team over at DigitalMint, but like we always joke that we have a relatively small team in the financial space, but I would put them up against a team 5 times their size, because the first thing we did was there's mandatory training on how crypto investigations work. But not only that, there's mandatory training on how normal typology investigations worked. We set a really high barrier of entry for AML, where you need the experience in AML and fraud detection to bring over. And on top of that, they are all certified in every tool we use that offers a certification, because I'd much rather have 5-10 experts on a team that can detect anything just by looking at a transaction or a pattern or an account or a portfolio or anything than have 50 people that are, I don't want to say flying blind, but just less confident in what they're looking at. Because I think, yeah, training, especially in this space, and experience is just crucial. Yeah.
Just one thing I want to give some credit to the cryptocurrency, the cash to crypto ATM, particularly the ATM industry, is that the actual machines that are being manufactured have the ability to provide and collect robust compliance data. It's on the actual service providers that are using them to actually build out robust compliance kind of frameworks that can be relied upon by regulators and law enforcement, and most importantly, the customers. One of the things that was interesting in recent developments is the CFPB coming out looking to actually bring in better oversight across the crypto industry as a whole. And I think that the cash to crypto industry is ideally placed to kind of provide that level of kind of security for their customers that may not be there in other parts of the financial industry.
That's right. All right, to be go ahead.
I was just going to say, the shift is kind of what Paul was saying. The shift is definitely there. So we're seeing, and credit to the industry again, we're seeing people being hired from Western Union and major financial institutions and law enforcement and being brought over to the crypto ATM space because the industry recognized, yeah, we have the data, we just need the expertise. And it's great to see that shift. It's great to see, instead of hiring someone right out of college and hoping, or a friend and hoping that they might grow into this role, going out and getting someone that has 10 years of experience. So yeah, it's a welcome shift in the industry mentality. I'm happy to see it.
Awesome. All right, we have 1 minute left. And with that, I would like to take from each one of you one takeaway. So for everybody watching us right now, if you had to give them one takeaway from this webinar, what would it be? Let's start with Rich.
Cryptocurrency compliance is far from prohibitively expensive, and it's very easy to check whether a company is giving you virtue signaling or the real answer.
Thank you. Seth?
I was hoping to go last. The one takeaway I would say is, especially bringing it back to detecting human trafficking in your locations and in your portfolio, the transactions are small. The wallets aren't necessarily attributed. So because of that, building out a scenario just based on TRM Labs platform or just based on a phone number or anything isn't going to result in what you're hoping it will. So that brings me to the one key takeaway. Reach out to the experts. Collaboration in this space is monumentally important. DigitalMint's worked with ATII a number of times. We've worked with other NGOs. We actually started with TRM, and actually everyone on this call helped find one that like crypto3c.org, where we want to build out these typologies, work with the industry, and rely on expertise that you might not have. And DigitalMint does the same. We rely on expertise that we don't have. And that way you can build out a scenario and detection method that you're confident in, because it's really hard to do just on your own.
That's right. Paul?
I think the important takeaway that I have is that cryptocurrency ATMs have a bit of a bad rep, and it's not because the tools aren't there to have a very safe and secure ecosystem. I think that there may be some barriers to entry from compliance awareness and an understanding of what the actual regulatory systems are, but that's not an insurmountable kind of step. And as Rich kind of points out, it's important for all of these companies to actually use tools like TRM and our competitors to build a safer ecosystem for billions of people, and to take the training that's available to actually make sure that you're using these tools to the best of your ability.
Right. Awesome. We are out of time, unfortunately, but I really want to take this time to thank all of our panelists. This was really insightful, and I really appreciate your participation. And thank you all for tuning in.
Thank you for the opportunity.
Yeah, I appreciate it. And if anyone wants to reach out, I'm sure everyone on this webinar would be happy to further the conversation.
Yes.